MSCI, a leading provider of investment decision support tools worldwide, has announced it will be providing its MSCI environmental, social and governance research ratings and screening tools to a local asset management company. That's in order to integrate ESG factors into its investment process. Henry Fernandez, Chairman and CEO of MSCI. A lot of acronyms there of MSCI. Of course, you're joining me in studio. Thank you very much for joining us today. Great to have you in South Africa. Let's just look at this broadly. Of course, environmental, social and governance factors being incorporated into the broader investment mandate is becoming a key trend that we're looking at. Would you say that asset management managers globally are starting to embrace this trend?
Definitely they are. I think what the events in the last 4 or 5 years have demonstrated is that it's a very interconnected world. And as such, the sustainability of investments over long periods of time, particularly in the corporate sector as the main agent of economic growth in the world, have to be taken into account when people are making investments in those companies around the world. And that is a major driver of what is happening in this space.
Which countries, if you're looking at it from a global perspective, have been the leading age adopters when it comes to understanding the incorporation of environmental, social and governance factors into their investment decisions?
So going back a few decades, the very early investors using ESG criteria were Northern European countries and some of the investment arms of religious organizations in the US, like certain Christian organizations or Catholic organizations. And that's what is called value-based investing, investing on the basis of values and principles. And obviously, many university endowments have always taken into account this kind of investment, including going way back to the apartheid days. In the recent past, the major countries have been pension funds, again in the Northern European countries, in the UK, in Australia, in Canada, and some parts of the United States, including California.
Okay, so you're in South Africa. Investec is the company that's looking to incorporate your ESG research tools into their investment decisions. Just give us an idea overall, though, how you evaluate South Africa's asset management community. Are we behind the curve? Are we on par with trend right now? Or are we slightly ahead?
Well, I should have mentioned that South Africa is one of those leading entities right now, leading countries in ESG, incorporating ESG criteria in the investment process. So I would say that South Africa is now ahead of many other countries in 2 respects. One, there is a regulation in the Pension Fund Act that encourages and induces pension funds to take ESG criteria into account in their long-term investments. Secondly, you have the Code of Responsible Investing for South Africa, and that is a voluntary industry-driven code, so that the industry, the investment management industry, also takes into account this criteria for their investment. We don't see a lot of that in other countries around the world. So therefore, South Africa is definitely now ahead of many other countries.
So it's really a regulatory regulatory driver right now when it comes to South Africa, or would you say that the regulation is just catching up to what is required from the investment community?
I think it's both. I think it's a realization by many of the actors, so to speak, in the investment community, including the pension funds in South Africa, and that's why the CRISA code was put into effect. That's a voluntary industry-driven initiative, not driven by a regulatory body. And then in addition to that, obviously, you have the Regulation 28 of the Pension Fund Act, and that is obviously driven by the regulators. But I think it's both. I think there is a realization in the industry in South Africa that the country and the investment community needs to be a leading provider of these kinds of investments and analysis in the world.
Just looking at Regulation 28 and reading out, the line that it draws attention to with regards to ESG, it says investment managers need to give appropriate consideration to any factor which may materially affect sustainable long-term performance of funds. That, of course, includes environmental, social, and governance factors. The question I have is, how do you reliably quantify the risks attached to these factors when it comes to, for example, say a miner, when it comes to perhaps even a retailer operating in an environment where there's political risk?
Yeah, some of these factors in ESG end up sometimes affecting companies on a discrete event-driven basis. The BP oil spill in the Gulf of Mexico, the problems with TEPCO, the Tokyo Electric Power Company in Tokyo during the earthquake and tsunami, and the like. So therefore, these factors, may not have a big impact on the performance of the shares of a company on a day-to-day basis, but when they do happen, when an event happens, there is a massive impact on that, on the company. Right?
But you draw us back to the BP story there, because how were we meant to know that spill was going to take place? Were there signals in the market that was a risk with regards to investing in the company?
That's precisely what we do. We collect a huge amount of data, and therefore we provide ratings of companies on the basis of our environmental safety, on the basis of social issues like how they're treating their human capital, and obviously corporate governance. And therefore, when you're looking at an investment, you need to assess what are the ratings of that company on the basis of those areas, and then determine what impact that may potentially have on the economic value of the firm, and therefore make your decision as to whether you want to invest in them or not. If you have a pristine rating in all aspects of that company, it means that hopefully that company will do very well economically on these issues. But if you have low grades across the board on a company like that, in a company, then you say there may be a potential problem down the road, and therefore I gotta either not invest or underweight my position in that company.
So ultimately the research helps to avoid landmines in the investment process. We're going to have to leave it there, but thank you very much for joining us today. Henry Fernandez, the Chairman and CEO of MSCI, here with us in studio and of course in South Africa at the moment.